What if I told you that in the next 30 minutes you could learn the exact blueprint that billionaires and financial masters use to build unshakable wealth? What if the difference between financial freedom and financial struggle isn't about how much you earn, but about what you do with what you earn? Welcome to the complete breakdown of Tony Robbins' Unshakable, Your Financial Freedom Playbook, the book that reveals the secrets of the world's greatest investors and shows you how to create peace of mind in a world of financial volatility. Tony Robbins spent over 4 decades studying peak performance, interviewing more than 50 of the world's most successful financial minds, managing billions of dollars. This isn't theory. These are proven strategies from people who've actually created massive wealth. In this book, Robbins teams up with Peter Mallouk, ranked as America's #1 wealth advisor for 3 consecutive years, to give you a step-by-step playbook for financial freedom. Over the next 28 minutes, we'll journey through the 4 core sections that will transform how you think about money, investing, and building lasting wealth. You'll discover why most people fail financially, the myths that keep you broke, and the simple but powerful strategies that can make you unshakable in any market condition. By the end of this video, you'll have a complete roadmap to financial freedom. So, let's dive in. Chapter 1, Unshakable. The journey to financial freedom begins with understanding what it means to be truly unshakable. Robbins defines this as having complete peace of mind about your financial future, regardless of market turbulence or economic uncertainty. Most people live in constant financial fear. They worry about market crashes, recessions, and whether they'll have enough money to retire. But unshakable investors think differently. They understand that volatility isn't the enemy, it's the opportunity. The key insight here is that wealth isn't built by avoiding risk, but by understanding how to manage it intelligently. Unshakable investors know that every market downturn in history has been followed by recovery and growth. They don't fear the storm. They learn to dance in the rain. Chapter 2, Winter is coming. But when? Robbins emphasizes a crucial truth. Market corrections are inevitable. In fact, they're healthy. Since 1900, the stock market has experienced a correction of 10% or more about once every year. Bear markets happen roughly every 3 to 5 years, but here's what separates winners from losers. Unshakable investors prepare for winter while it's still summer. They don't try to time the market or predict when corrections will happen. Instead, they build their strategy knowing that downturns are coming, and they position themselves to profit from them. The practical lesson is clear. Don't let fear paralyze you into inaction. Accept that volatility is part of the game and use it to your advantage. When others are selling in panic, you'll be buying at discount prices. Chapter 3, Hidden Fees and Half-Truths. One of the biggest obstacles to building wealth isn't market volatility. It's the financial industry itself. Robbins exposes how hidden fees can destroy your returns over time. A seemingly small 2% annual fee can cost you hundreds of thousands of dollars over a lifetime of investing. The average actively managed mutual fund charges fees that can reduce your returns by 3% or more annually when you include all costs. Over 30 years, this means you could lose more than half of what your return should have been. The solution is simple but powerful. Minimize fees at all costs. Look for low-cost index funds with expense ratios below 0.1%. Every dollar you save in fees is a dollar that compounds in your favor for decades. But it's not just about fees. Robbins reveals how many financial advisors are paid to sell you products that benefit them more than you. Always ask, how is this person compensated? Are they a fiduciary legally bound to act in your best interest? The answers will shock you into making better decisions. Chapter 4, The Core. 4 Principles. Robbins distills decades of research into 4 core principles that every unshakable investor must follow. Principle 1, don't lose money. This seems obvious, but most people violate this constantly. They chase hot stocks, try to time the market, or panic sell during downturns. Protecting your capital is always the first priority. Principle 2, asymmetric risk-reward. Look for investments where you risk little but can gain much. This isn't gambling, it's intelligent positioning. The best investors minimize downside risk while maximizing upside potential. Principle 3, tax efficiency. It's not what you earn, it's what you keep. Understanding tax-advantaged accounts, tax loss harvesting, and efficient asset allocation can add hundreds of thousands to your lifetime returns. Principle 4, diversification. True diversification isn't just owning different stocks. It's spreading risk across asset classes, geographies, and time. When one area suffers, others can thrive. These 4 principles form the foundation of every successful investment strategy. Master them, and you'll be unshakable regardless of market conditions. Chapter 5, The Ultimate Asset Allocation. Asset allocation, how you divide your money between different investment categories, is more important than individual stock selection. Studies show that 90% of your investment returns come from your allocation decision, not from picking individual securities. Robbins presents several model portfolios based on your risk tolerance and life stage. The key insight is that as you age, you should gradually shift from growth-focused investments to more conservative, income-producing assets. For younger investors, the all-weather portfolio might allocate 30% to stocks, 40% to long-term bonds, 15% to intermediate-term bonds, 7.5% to commodities, and 7.5% to REITs. This diversification ensures that some portion of your portfolio performs well in any economic environment. The practical application is simple. Determine your appropriate asset allocation based on your age, risk tolerance, and timeline. Then stick to it religiously, rebalancing annually to maintain your target percentages. Chapter 6, The Index Fund Revolution. One of the most powerful wealth-building discoveries of the past century is index fund investing. Robbins shows how index funds consistently outperform actively managed funds over the long term while charging a fraction of the fees. Here's the shocking truth. Over any 15-year period, fewer than 4% of actively managed funds beat their index fund benchmarks. Yet people continue pouring money into expensive, underperforming actively managed funds. Index funds work because they own the entire market, not just a selection of stocks that a manager thinks will outperform. When you buy an index fund, you're betting on the long-term growth of human innovation and economic progress, a bet that has paid off consistently throughout history. The strategy is beautifully simple. Put the majority of your long-term investments into low-cost, broad market index funds. Let compound interest and time work their magic while you focus on living your life. Chapter 7, The 4% Rule and Financial Independence. Financial independence occurs when your passive income exceeds your living expenses. Robbins introduces the 4% rule. You can safely withdraw 4% of your portfolio annually without depleting your principal over a 30-year retirement. This means that if you need $40,000 per year to live comfortably, you need $1 million in investments to be financially free. Need $80,000? You need $2 million. The math is simple, but the implications are profound. The key insight is that financial freedom isn't about a specific dollar amount. It's about the relationship between your expenses and your assets. You can reach freedom faster by either increasing your savings rate or decreasing your expenses. Robbins emphasizes the power of geographic arbitrage, living in lower-cost areas where your money goes further. $1 million might provide a modest retirement in Manhattan, but it could fund a luxurious lifestyle in many other parts of the world. Chapter 8. The Bucket Strategy. To implement your financial independence plan, Robbins suggests dividing your money into 3 buckets. Security bucket, 6 to 12 months of expenses in cash for emergencies. This provides peace of mind and prevents you from touching long-term investments during temporary setbacks. Growth bucket, the majority of your wealth invested in diversified, low-cost index funds for long-term appreciation. This bucket feeds your future financial freedom. Dream bucket, money set aside for goals and experiences that matter most to you. This ensures that pursuing financial freedom doesn't require sacrificing the life you want to live today. The bucket strategy balances security, growth, and enjoyment. It's not about depriving yourself today for some distant future. It's about conscious allocation that serves both your current needs and long-term dreams. Chapter 9. Silencing the Enemy. Within your biggest obstacle to financial success isn't the market, the economy, or bad luck. It's your own psychology. Robbins identifies the mental patterns that sabotage wealth building and shows how to overcome them. Loss aversion causes people to feel the pain of losses twice as intensely as the joy of equivalent gains. This leads to panic selling during downturns, locking in losses at the worst possible times. Recency bias makes recent events feel more important than they actually are. After a market crash, people become overly conservative. After a bull market, they become dangerously aggressive. Confirmation bias leads people to seek information that supports their existing beliefs while ignoring contradictory evidence. This prevents learning and adaptation. The solution is awareness and systems. Create investment rules when you're thinking clearly, then follow them mechanically when emotions run high. Remove emotion from investing through automation and discipline. Chapter 10. Real wealth versus paper wealth. True wealth isn't just about accumulating assets. It's about creating sustainable cash flow that supports your desired lifestyle. Robbins distinguishes between paper wealth, net worth on paper, and real wealth, actual purchasing power, and lifestyle freedom. Many people focus obsessively on their net worth while ignoring cash flow. They might have substantial assets but struggle to access the wealth those assets represent. Real wealth comes from assets that produce regular income without requiring your active involvement. This shifts the focus from accumulation to cash flow generation. Instead of just buying and holding index funds, consider investments that produce dividends, rental income, or business profits. The goal is creating multiple streams of passive income that can support you regardless of market conditions. Chapter 11. The myths that Robbins systematically destroys common financial myths that keep people broke. Myth 1. You need money to make money. Truth. You need knowledge and time. Starting with small amounts and consistent investing can create substantial wealth through compound growth. Myth 2. Investing is gambling. Truth. Gambling is betting on random outcomes. Investing is buying ownership stakes in profitable businesses with long-term growth prospects. Myth 3. You should buy individual stocks. Truth. Unless you're a professional analyst with inside knowledge, you're better off owning the entire market through index funds. Myth 4. Market timing works. Truth. No one can consistently predict short-term market movements. Time in the market beats timing the market. Myth 5. You need a financial advisor. Truth. For most people, a simple portfolio of low-cost index funds outperforms expensive, actively managed advice. Understanding these myths prevents costly mistakes that can derail your financial progress for years or decades. Chapter 12. The Compound Effect. The most powerful force in wealth building is compound interest, earning returns not just on your original investment, but on all the returns your money has previously generated. Einstein allegedly called it the eighth wonder of the world. Robbins illustrates this with powerful examples. A person who invests $5,000 annually starting at age 25 will have more money at retirement than someone who invests $10,000 annually starting at age 25-35, despite investing less total money. The extra 10 years of compounding makes the difference. The key insight is that time is more important than timing. Starting early with small amounts beats starting late with large amounts. Every year you delay investing costs you exponentially more in lost compound growth. But compound interest works both ways. Credit card debt, charging 18 to 24% annually, compounds against you. Paying off high-interest debt is equivalent to earning a guaranteed return equal to the interest rate. One of the best investments you can make. Chapter 13. Making it simple. Despite all the complexity in financial markets, successful investing is remarkably simple. Robbins reduces it to a few key actions. 1. Automate everything. Set up automatic transfers to investment accounts so saving and investing happen without willpower or memory. 2. Keep costs low. Choose investments with expense ratios below 0.2%. Over decades, this simple choice can add hundreds of thousands to your returns. 3. Stay diversified. Own a piece of everything through broad market index funds. When one area struggles, others often thrive. 4. Rebalance annually. Sell high-performing assets and buy underperforming ones to maintain your target allocation. This forces you to buy low and sell high. 5. Ignore the noise. Financial media profits from keeping you anxious and active. Turn off the financial news and focus on your long-term plan. The beauty of this approach is its simplicity. You don't need to become a financial expert or spend hours managing your investments. You just need to make good decisions once and let time work in your favor. Chapter 14. The Ultimate Gift. The final lesson is that financial freedom isn't ultimately about money. It's about choice and contribution. When you're financially independent, you can choose work that fulfills you rather than just pays the bills. You can contribute to causes you care about. You can help family and friends without compromising your own security. Robbins emphasizes that the ultimate goal isn't accumulating the most money, but using money as a tool to create the life you truly want. Financial freedom gives you the power to align your time and energy with your deepest values and highest aspirations. The wealthy understand that true fulfillment comes from growth and contribution. Once your basic needs are secure, focus on how you can use your resources to grow as a person and contribute to something larger than yourself. And there you have it, the complete roadmap from Tony Robbins, Unshakable, for achieving true financial freedom and peace of mind. Let's quickly recap the key takeaways that can transform your financial future. First, develop an unshakable mindset. Accept that volatility is normal and profitable. Prepare for winter while it's summer, and use market downturns as buying opportunities. Second, implement the proven strategy. Focus on asset allocation over stock picking. Use low-cost index funds. Follow the 4% rule for financial independence. Organize your money into security, growth, and dream buckets. Third, master the psychology of wealth. Recognize and overcome the mental biases that sabotage success. Focus on cash flow over net worth. Reject the myths that keep people broke. Harness the incredible power of compound interest. Fourth, keep it simple and automated. The most successful investors follow simple systems consistently over long periods of time. Remember, becoming unshakable isn't about having millions of dollars in the bank. It's about having complete confidence in your ability to handle whatever financial challenges life throws at you. It's about knowing that you have a plan, you're following proven principles, and time is working in your favor. The difference between financial freedom and financial struggle isn't complicated. It comes down to understanding these principles and having the discipline to apply them consistently over time. Start where you are. Use what you have. Do what you can. Your future unshakable self is counting on the decisions you make today. The path to financial freedom is clear. The only question that remains is, will you take the first step? If this summary has provided value, consider diving deeper into the full book. And remember, knowledge without action is worthless. The best investment strategy is the one you actually implement. Your unshakable future starts now.